Hello traders, how are you? Vladimir here from Traders Academy Club, and this is the weekly trading review of the trading systems, the SRS Pro, the Forex Triple B PRO, and the Divergence University strategies. The purpose of this video, as always, is educational, is to explain all the trading factors and all the considerations we have during our trading with the systems, and to explain all the good things, all the bad things, why, where, how, why not, and to share with you from our experience, how do we choose our trades, the good ones, the bad ones, and mainly why, okay, what stands behind it. So that's pretty much it. So let's begin then, and the first one would be this week. Is the Forex Triple B. Okay. Now, before I start, if you have the trading systems or the course, the Divergence University, so you can, of course, watch the review that is relevant to you. If you don't have the systems and you would like to have your copy, you can get directly from the websites, the forextripleb.com, srstrendrider.com, or divergenceuniversity.com. You can also find these links below in the description and the pinned comment, the message. Okay. And if you have any questions about any of the systems, its components, the features, or anything I explained, feel free to contact me and to leave your question below in the comments, and I'll do my best to answer as soon as I can. So the first one is the Forex Triple B, as I said, and let's go to our Triple B chat. By the way, each of these systems, the Forex Triple B, the SRS, the Divergence University, has its own dedicated group where when I share my trading ideas, other members are welcome to share their ideas. You can ask all the questions. Basically, me and my guys are there for you. So this is the Forex Triple B. The two pairs I want to discuss about here is the Euro dollar and the Aussie dollar. So I want to explain why do I choose my trading levels in advance, and then I'm looking for my trading opportunities there. This is a very important factor which I want to cover here. So the first one is the Euro dollar. So what do we have here, and how do I choose my my pair? So first of all, trend analysis. Okay, besides the indicator that indicates me we have a very serious bearish trend, and observation on the MACD, I can see that there is no bullish divergence against me. The MACD just crossed the zero line to gain the momentum on the higher time frame. I understand that that's pretty much a sell. And how do I choose my sell? So besides the indicator, I love to deal with the price. Okay, that's what the price tells me clearly. You don't need to be genius here to have this read. We have a sequence of lower highs, lower lows, which stands for a bearish trend. After in trending conditions, we have usually two important levels: the broken support that becomes the resistance. Okay, this was the support, this is the support that becomes the resistance, and this was a support, now is a resistance. Okay, and on these areas I'm looking to put pivot zones, which are automatically scanned for you by the Forex Triple B. And here is what I see. I love to make combinations, ideally of daily and weekly levels, and if impossible or too far, then on the two following sessions. So today and the session before, or this week and the session before, a week before. And I love these combinations because different mass calculations based on different periods of time that show the same trading zone give you higher probability that this zone would really be significant and would have the possible reaction on the price that you are looking for. So I'm looking at this daily. This is from day before, and the current situation. This is a weekly level. So, okay, classical scenario. This is the first zone. Then I'm looking on a previous daily pivot and the current daily resistance. Again, it creates me a beautiful window of opportunities. And when I take that to the trading decisions, here we reached the first zone right here. Okay, and there were basically two opportunities. The first one from the bounce of this area, the first area we marked, okay, was right here. Actually, right here, sorry. This was the first possible entry as the price reaches the zone of the Bollinger, bounces back and break the most recent fractal. Okay, this is the first trading opportunity. And with this protection, we could expect it to see continuation down. If you missed this one, then the next one appeared not too far, again from the same zone. And that's the beautiful part of it. As long as the price was in the same range, the conditions did not change. We're still in lower highs, lower lows. We're still in a bearish trend. We reached the pivot zone. We never flipped the trend. Okay, we're now retesting it. And now we are, as we can see here, on the Bollinger and breaking down the fractal. Okay, it was several times on the Bollinger, never broke any of the fractals, right? Only here it does break the fractal. This is a classical trading opportunity, and the pair delivered. Also, the next one delivered all the way to the downside. The previous one here was this breakout, but we didn't take it, and that's the rest. The rest is history. Okay, then we got another opportunity. And again, this was the first one, as you can see. Just change that. Okay, this would be the first one that would deliver. Then you got the other one, which we found, and there was another one later on, and again from the same levels. Now look, the trend did not change. You remember the trend analysis, right? It just extended. And the same story, the resistance in play is currently here, and the pivot zones are still here. Okay, if the price respects that and gives me another opportunity, I'm there, and it did. It rallied back to the Bollinger Band, break the last fractal afterwards. Okay, another good opportunity for an entry, and another one that really managed to make the movement. So the euro dollar was one of these instruments we were following in our in our Telegram channel, and it's one of those that delivered pretty well. The other one I was waiting for was the Aussie Kiwi. Again, same logic. I'm checking the trading filters. This is the indicator you get when you get the Forex Triple B. The automatic scan for the trend with different sensitivities. Okay, you have a high sensitivity, medium, and low sensitivity. Quick scan on this instrument and the price behavior, we can clearly see that we are in an uptrend. What are the supports? Here, right? And here, and we have the resistance that became a support right at this area. Okay, so these are the two classical zones I'm looking to trade. If I have pivots around it, and I do weekly resistance pivot and the daily pivot, first area, okay, and then the daily pivot and the weekly pivot, again, second area. That's it. They are combined on mass and proven highs, lows, which behave in that case as definition of a trending structure and support and resistance. That's it, guys. Now, I don't know, and you can see that I publish these ideas in advance, as you can see yourself. I don't know where we will get a setup. I cannot predict it. Nobody can. Whoever tells you I can predict that level. No, nobody can predict a level. I can prepare, I can analyze, I can choose the place, and if there is a setup that stands for the rules, I'm trading it. Well, if I'm around, of course, the computer or my team, right? If we are not, we don't trade it. And that's it. And it's important to understand that we are not dealing with any predictions. We are not dealing with any sort of magical, I don't know, some reader in a coffee or something. No, we are working absolutely based on trend, price, triple Bs and triple Bs, pivot zones and Bollinger Bands. That's it. This is our combination. Making sure on a higher time frame we don't have obstacles, and that's it. So I mark my zones. I'm waiting for the setups. In that case, this also was a pair we spoke about, and here we are. So this was the first one. Okay, again, you can see the zone, first zone, and the second zone, right? These are our levels. So we are in the zone with the weekly pivot right here. Note, none of the fractals, you see, it was visiting the Bollinger Bands before, but this fractal was not broken. This fractal was not broken. This fractal was not broken. Okay, this fractal was broken, but there was no bounce of the Bollingers here. And here we got bounce of the Bollinger and the last fractal. That's it. So we got the supportive area, we got the Bollinger Band bounce, we got the pivots in play, and fractal is broken. This is an easy decision, and in that case also delivered nicely. And then as the price started the bounce, also short-term opportunity came in play, and look what happens here. In this place, look at the Bollinger. See, the band was broken, so the trend was under question on the lower time frame here. However, with the trend filters, nothing changed. Everything stands still. So we are waiting for the Bollingers to come up again, and the trend is back to bullish. Why? It flips from lower lows and lower highs to higher highs and now higher lows. The trend flips again. We are respecting the, as you can see, pivots in play. The current day pivot is on the same place where the previous supportive pivot is. The resistance is now a support. Same story, same logic with same analysis. And two opportunities, and again, I cannot ever predict where the bounce will happen from. I just mark my levels and I'm waiting for the opportunities to happen. Trending structures, pivots, making sure higher time frame not against you, and wait for the Bollingers to bounce and break. That's the triple B. And this is exactly how we use it. This is exactly the things we take into consideration when we make our trading decisions. And this is what I consider to be right when you deal with the Forex Triple B. And as I said before, if you don't have this system, you think it could contribute to your trading, it could help you with your trading, then you can get it directly from the website, forextripleb.com, or you can find the website below in the pinned message in the comment section. Next one would be the SRS, where also I want to, where is my SRS? Where I want to show the previous week. Also, we have the SRS group where we share the trading ideas. And again, as you can see, I prepare my trading opportunity. I choose my instruments, I make my analysis, and then I follow. Okay, no magical solution, no some secret coffee reader or something like that. Pure analysis, trending conditions with the SRS indicator, and that's it. So what are the instruments I want to cover? Dollar CAD and Euro dollar. We both were here. Let's start with the dollar CAD. I want to explain why this was my plan, and I will explain how exactly I traded it exactly as planned. So first of all, we have been in a bearish trend here. Okay, lower highs, lower lows. Again, you don't need to be genius to see that. Okay, it stands for itself. Lower highs and then lower lows. You can clearly see that, right? You have a clear trend going down. So by breaking the trend, we want to make sure we flip the highs, and that's the most recent highs, 1, 2, they are pretty much in the same area. And I want to see the buyers in control. When the buyers in control, what do, guys? Simple. Go with the simple logic. I always encourage that. When buyers in control, they create higher highs and higher lows. That's the bullish control. And if we manage to take the control when the trend flips, right, we will be waiting for this trade. And this is exactly, let me just find this dollar CAD here. This is exactly what we got here. 1-to-1, as we wanted, guys, as we wanted. 3 higher highs, higher lows. We broke this high that I showed you, right? The resistance. Okay, and we wait for this ABCD. Now, why specifically to here? Because again, we are going to this with the supportive areas. Remember, in a trending structure, you have two zones to pay attention to: the lows that behave as a sort of demand zones, and the broken resistance that become the support. That's the zones you pay attention to. This is a classical demand zone on a broken high, on a broken resistance, a classical trading area. And what did we get here? We flip of the trend, higher highs in play, ABCD, and breakout. All the rest is history. We plan it, we trade it exactly as we wanted. It was good because we were around, right? It's pity when you plan the trade and then you have, life commitments, responsibilities, and you are out doing your life things, and then you will come back and like, the move happened. Sometimes it happens. Don't chase the market. Wait for your opportunities. Once they are there and you are there, trade them. So again, I wanted to explain why the logic here exactly was planned this way. I want to flip the trend, making higher highs, higher lows. Take a look on the SRS scan here. Okay, the trend, the momentum is bullish. The sentiment was still bearish at that point. Okay, and the 1 hour, 4 hour chart, 1 hour, 50 minutes candles already lined up. 4 hour wasn't. But by the time we got the alert, as you just saw here, by the time we get the alert, look what happens here. 1 hour is now fully bullish. Momentum is fully bullish. Sentiment on the 1 hour switches. And look at the 4 hour also becomes bullish again. So very important thing, preparation of the plan. If it's there, execute it. And the next one I want to explain also is the euro dollar. It's the same one you saw on the Triple B, just was also available on the SRS. Same trending structure, but much clearer conditions. We don't need to wait for any flip here because all we have is here. Look at the candles, guys. SRS candles, trend scan. Absolutely bearish all around. Sentiment, momentum. And look at the candles here. Who is in control? How big difference you have between the bearish candles and the bullish candles here. Absolutely bearish control. You don't need to be genius to understand sell the rallies is the right decision here. On the euro dollar, we got it here. The ABCD came in play. We got correction back to, and again, look, this isn't a downtrend, and you got the resistance, the support now becomes the resistance, and the high that behave as the supply zones. Once you reach this area inside, and you complete ABCD. Oops. You complete this ABCD, you know that okay, it's clearly bearish, and it screams a trade. ABCD is broken. We got the trade. That's it. Nothing much to add and to say. So for the SRS, guys, once again, as you can see, I have no idea when I share my opportunities. I have no idea how the market would be like. But what I do know is make my preparation. I make my analysis. I choose a direction, clear trending structures or preparation for them, like in the dollar cut case, and wait for that to trigger. Okay, you can see on all the instruments we were following. All the instruments we were following here, you can clearly see trending structures and trending conditions. And then just the updates, pretty much as is. That's it, guys. I hope you see the logic we do here. Why do we do it the way we do it? And I want to explain my analysis here and the trading decisions behind it. Again, if you have any questions, I'm there for you in the group, of course, the SRS, Triple B, any group, or you can reach me out in the comment section below this video. The last one would be the Divergence University. where I want to cover the hidden divergence principle, and also one attempt we had it lost, but one attempt we did with the oil. I'll start with that because the oil was clearly bearish. Okay, no doubts. So ideally, sell the rallies here. However, and this is something important to pay attention to, this, you see, it starts to like lose the bearish momentum and it becomes a false breaker. Okay, of this supportive area, dynamic supportive area. Now, what I did love here is the big divergence that we were carrying on a higher time frame, and the last one here, okay, 3 descending waves, another hint that the sellers might be losing control with a bullish divergence that you can clearly see on the moving average in the histogram. In 7 out of 10 times, this is an amazing sign that we will get the bounce back to this falling resistance. We even set our target before on the this support that is now resistance and the resistance before, okay, slightly before the trend line. But unfortunately, again, the momentum was so bearish that it immediately lost. Part of the game, just want to explain why. Again, 7 out of 10, this one would deliver, and with the proper risk reward, you would get what you are looking for. In that case, we didn't. So does that mean the strategy doesn't work? Absolutely not, because the name of the game here is statistics, probabilities, and risk reward, especially for the divergence trading. Because if we trade the Forex Triple B and SRS in an averaged 1-to-1 risk reward for trades, then, and you can see that Triple B had a very solid trading week last one. SRS was nice solid week as well. The Divergence University, it looks like not cool, but what helps us always here is the probabilities and the risk reward. Because with a proper risk reward, which is positive, right? Anything above 1-to-1, and the probabilities that you will be right at least 50% of the times, you would, on the longer run, make your profits. And it's very important to understand. So the next one I want to cover is the hidden divergence. And with hidden divergence, there are 2 key factors that we want to pay attention to. One, you are in trending structures. Trending structures in an uptrend, it's when you have higher highs, higher lows with you. Second factor, with you, I mean, in uptrend going up, right? The highs and lows have to go in the direction of the trend you're looking to trade. Simple. Okay, straightforward. Then you are looking for higher lows on the chart. So we did have higher lows on the chart. You can clearly see that there is also trending structure here, but basically this is where we take it from. So it's higher lows on the chart, lower lows on the indicator, indicating that despite the correction, the sellers are not making any lower lows. And that there is no divergence against you. And let's take a look on the Aussie franc. And that point, it's bigger. Here we are. Okay. At this point, you can see that here on the rally, there is no completed divergence on the 4-hour chart. Here we are. No way to make this divergence. This divergence will potentially be created later on. It was not created by the time that the 1-hour chart provided the setup. Here we are. And on the 1-hour chart, you can see that on the ongoing trending structure, at this point, no reversal divergence. Okay, only later it completed the final high and completed the divergence. Okay, so this was our decision here, and of course, lower time frame has to support the buys, and here we are. Here we are. Just want to show you. Here we are with the trend pullback, bullish divergence on the histogram. With the trend, we use the histogram divergence. We can also see that on the Bollingers, we are riding for more than 20 candles right here. So again, pretty straightforward decision for a hidden divergence. And same one was there for cut franc, where we were bullish in the view. Pretty straightforward scenario here. Also bullish hidden divergence here. Also on the lower scale. No ending signs. Higher time frame supports the buys. Let me show you that. Okay, here we are. Higher time frame, last divergence. It's a bullish hidden divergence by itself. And from this moment, right? Actually, even from earlier. Classical hidden divergence. Higher lows on the chart, lower lows on the indicator. Since this moment, it's only bullish. And 4 hour supports the buys, 1 hour bullish divergence, lower time frame indicates here we are. This was the trigger, right? Mm, 15 minutes. 1 second, guys. Just want to show you all the steps. Okay, here we are, and the 15 minutes in a trending structure by itself, in a hidden divergence by itself. You can see the structure on the bigger scale. You can see the structure on the lower scale. This was the ABCD correction and the new momentum. So wherever you choose, wherever you look, you find the hidden divergence build up on the 1 hour without ending divergence, on the 15 minutes without ending divergence. Note, we are just gaining momentum. So of course, the hidden divergence as verification comes in play. What happens since is that we expect to see at least one more high until divergence against will complete, which eventually did, by the way. And since then it's bearish, but it was pretty much easy decision. We expected to see at least this high until this divergence complete. And say no more, this one also worked out. And that's the two things I wanted to show about the divergence strategies: the hidden divergence in action and the false breakout on oil. Unfortunately, in that case, it didn't work out. But again, 6 out of 10, it will deliver with a good risk reward. I take these odds, and this is why once we spot these opportunities, we are there. Okay, this is the logic behind the divergence strategies. The at least 50% success rate with at least 1-to-1 risk reward. We are going with more. So that's it. This is how we progress here. So that's pretty much it for this video. I hope I managed to explain some of the things we take into consideration when we trade with the trading systems and the manual trading strategies. I hope you find it useful as always. If you have any questions, I'm there for you. And I hope to see you with us. You can find any of these trading systems below the video. There is also an option to get them free with the brokers program. So you can find all the information with the links below in the pinned message. Thanks for your time watching this video. I wish you all the best. I'll see you soon with more. Bye for now.